Back and joining us now on the show is Peter McGuire, XM Australia. Peter, hi, thank you for joining us. And one sector which really has started quite strong in this year clearly seems to be metals. The weakness in US dollar, where the index is trading at a 2-month low, definitely seems to be supportive. I want to ask you about the dollar index first of all. What's your sense on this one?
Well, good afternoon, Manisha. Look, where we're sitting at 95, it's no doubt going to show, I think, a lot more volatility over the next couple of weeks leading into March. We've been talking those highs, 96 and a bit, all the way down now to 95. I think there's going to be further softness in the short term. I wouldn't be surprised, fairly volatile in the sense of whipsawing, Manisha. So that's what I'm expecting over the short run.
And do you see that continuing to support the metal sector to begin with? Because when you look at copper, we're trading at a 12-week highs. Iron ore is at a 3-month highs. LME nickel at a 10-year highs. I mean, everything seems to be trading multi-month to multi-year highs back yet again for metals.
Absolutely. That copper rise over the last 24 hours has been dramatic, 3.5% bid up, 10,060. I'm not surprised when you're looking at ore, because of that big demand globally and, as far as iron ore, but some of those other base metals have been outstanding, and that's been a trader's delight. So that capture, and it's all, I think, blossoming along when you think about what's happening also with crude, Manisha. We've got WTI at $82.50. You got Brent at 84.5. So all of that's really ratcheting up, and then even big brother, the yellow metal, as we all love, gold, sitting at 18.25. So that's always a nice sign as well.
Peter, when we started this year, most people told us to be cautious and we wouldn't see a repeat performance of what we saw in 2021 yet again in 2022. But the first fortnight of the month of Jan, or this year for that matter, really has led to, as you said, money managers, fund managers buying into commodities yet again. What is the scenario from where we stand?
Well, Manisha, I thought one of the greatest times to trade was between Christmas and New Year that we've just been through. So that was outstanding. Then you're looking at what's happening in the last 2 weeks. It's been very, very strongly bid up. Great opportunities. US dollar all over the shop. Euro sold and then euro was bought. So all of that really leads to the next sign. I think it's going to be volatility for Q1 because of March and the blast off as far as US Fed. I'm interested to see what the ex-Wharton Dean, Pat Harker, has to say this evening from the Philadelphia Fed. I'm curious to hear what his comments are, Manisha. So all of that captured up is going to be, I think, an exciting time, and base metals, I think, will go for another run.
Oh, well, it does look like that, because the weakness in US dollar, China stimulus expectations, and the markets kind of shrugging off the Omicron impact on the global recovery are some of the factors which are supporting. But within metals, Peter, where are you most bullish? Where do you see a buying opportunity?
Well, Manisha, those aluminium and that are bid up, they're already at big high prices and lofty. So I think the market to look has certainly got to be copper. At 10,000, you could see a 10,500 over the next, I'm saying the next couple of weeks, maybe up to Lunar New Year. So there's the storyline there. The Omicron is pretty manageable and very well managed globally. So yeah, copper to be bid up. Crude oil also, it'll take it for a ride. So I think at the moment you'd have to be long some of those commodities, Manisha. Energy's a standout, and so is some of the base metals.
Oh, absolutely. While you did tell us about the copper and aluminum as a price range as well, what's your sense on crude prices then? Almost at 84 and 85. Where are we headed for this one?
Manisha, I would have thought we'd be at 70. I would have thought with inflation the way it is, at 40-year highs, we're now through 7%, that everything would have pushed crude lower. But no, it's up, and it's up very strongly, 20% up from those prices, nearly at 85 for Brent. So you've got to say it's on a run at the moment, never stand in the way of a bull market. You know that. So you could see an 86, 87 handle for Brent in the short run before Lunar New Year. So at the moment, it's strongly bid, and that's what buyers and that's what traders are wanting. Volatility and a chance to see that softer US dollar in the short term, and that's going to push them up higher.
Clearly, I was reading a Goldman Sachs report, Peter, and it says that the supercycle in commodities is on and may continue for the 10 years, and this year perhaps being the second or third year. Then, I mean, are we still on that theme? Are we still talking about that?
Manisha, you know as well as I do, I spoke to Jim Rogers, I remember it. I went and saw him in 2006 in Hong Kong. We sat and at the Four Seasons. I spent a couple of mornings with him. And when you listen to someone as intelligent as Jim, this super cycle hasn't gone away. This super cycle has started in '01. It's still going, and it'll still run well into the next decade. So the global demand, Manisha, I don't think is going to wane, and the overall appetite for all base metals, stud lumber, have a look at food consumption, all of that, you know, wrapped up together is going to be very, very strong demand picture. So yeah, I believe the super cycle never went away, Manisha.